And welcome to today's morning report with me, Richard Perry, market analyst at Handtech Markets on Monday, the 20th of February. We've got a fairly sort of positive outlook today. It's come with Wall Street again pushing on to higher ground. And there's sort of a bit of choppy move on the dollar in the last few days, really. We've got no steer from Treasury markets today with the US closed for President's Day, and so that move on the 2-year lower on Friday was you can't really get much off that chart really, but the 2 years and 10 years just pulling lower again. So you can see a fairly sort of choppy move that we've seen in these treasury markets over the last sort of couple of months really, and that's sort of reflected really in the dollar, isn't it? Where you're seeing these choppy moves as well. The uptrend has been broken by the little correction that we saw on Thursday, Friday, Tuesday, Wednesday, in the wake of the congressional testimony from Yellen, and also that move on Friday, which sort of bounced again. So it is interesting that we're starting to see the dollar becoming a little bit more choppy. We've got the prospect of this big fiscal stimulus package that Donald Trump's working on, and I think that's going to be beginning to sort of weigh on traders' minds, but certainly at the moment, lack of real direction, although obviously you would say that holding above 100 and sort of area is fairly positive, I think, for the dollar. In terms of your sort of oil price, again, very flat on the oil price, just picking up slightly today, but anything sort of around the 54 area tends to fail in recent weeks on WTI, so still not really seeing any major direction from the oil price. But in terms of equity markets, basically mixed today, although the DAX is slightly outperforming, but generally speaking we've got little real direction with the US on holiday for President's Day today. Now we've got as well very little in terms of the economic data to really sort of drive markets either, so I think it could be a fairly subdued day all round. But my chart of the day is the sterling yen. Sterling yen has been increasingly sort of pulling towards the apex of this consolidation symmetrical triangle, and it's becoming close to a test of the old uptrend, hitting that pretty much the low of that trend line today and bouncing. It's interesting to see whether this one actually does turn into a move to the downside though, because obviously we've had these sort of 4 candles that had been sort of accelerating the downside. Yes, you've bounced today, but is it just a bounce into resistance? I think it could be, because you look on the hourly chart and you think, well, you've got this top pattern here underneath 141. We've basically just unwound to that now, and it's sort of starting, I think, or will start to find a bit of a struggle to continue that move, and unless it sort of breaks back above 141.95, which was Friday's sort of reaction high. Unless you see move above that, I think it's still looking at a corrective pattern, and this little move here is just unwinding the market. You could probably, on an hourly chart basis, just do that as well. You're basically trading around that downtrend at the moment, so it has just effectively unwound back towards the neckline of that downtrend now. So with the RSI around the mid 60s again, MACD lines around neutral, stochastics already showing signs of rolling over. Could this be the little sort of bounce that gets sold into? I think it could be. I think there is further downside to play, and I think we're going to get testing of this old uptrend here. I mean, sterling weakness, I think, is going to happen. We've started to see sterling weaken on the UK economic data, and I think generally speaking, this sort of is that still uncertainty and sort of pull on the yen, which just drives investors towards safe havens such as the yen. I think in light of the uncertainty over Trump's presidency. Also, political risk in the Eurozone as well is going to be an increasing factor that I think maintains yen strength. So I think this one has legs to go to the downside to certainly test and possibly break that move. of recent months. 138.50 is the key support. Below that, you're sort of looking at 136.45. But I think this one is a chart that's likely to break to the downside in due course. So I wish you good luck in your trading today, and I'll speak to you later. Thank you.